This was an amazing setup on Euro USD that I had to take, and I took this setup because of a certain chart pattern that I always like to take, and the chart pattern is called a dominant break. So let's go to our tools and get our Fibonacci retracement. And what is a dominant break? A dominant break is a chart pattern or is a candlestick pattern per se, where three or more candles successfully break past one bullish candle or one bearish candle, and now we are trading a dominant break sell. What is a dominant break sell? A dominant break sell, it's a chart pattern. I always say chart pattern, it's a candlestick pattern where three or more candles successfully break one bullish candle, and as we can see from the chart, we see that many candles successfully break one bullish candle, which is a confirmation for a sell. But again, however, note that before you trade a dominant break sell, you must make sure that the trade is at the point of resistance. So we highlight our shadow zone. Look at our shadow zone. We are seeing that market is at a point of resistance. So it's another confirmation for a valid sell. Now, another keen observation I like to take is that when you look at the resisting candle, when you look at the resistance point, when you look at the zone, we know that the body was not broken by anything. Look at the two bodies, or look at the two zones highlighted by the shadow points. We can see that their bodies are well in line, like a straight line, which was not broken. Like there was no higher high, there was absolutely no breakout, there was no other pattern, or there was no other structure, sorry, which disturbed our trade. So that's another confirmation. And to trade the dominant break, our first take profit must always be at the 161 zone. Yes, must always be at the 161 zone. That's why I put my first take profit here. Since I am scalping, and a dominant break is a candlestick pattern where it's always advisable to take your first take profit at 161 zone, or if not all, majority of your profit at 161 zone, because that's the highest point where market will come and retrace back always after. So, and bear in mind that I took this trade after the candle retraced back to the 50% zone. So when it retraced back to the 50% zone, I saw it as another confirmation to take this trade, which that's why you see most of my orders are at the top and not at the breakout zone. They are at the top and not at the breakout zone, which is the 100%, because the breakout zone is always at the 100%, guys. So okay. Okay guys, so we are back again, and we see that our trade is going pretty smooth, and it's almost reaching our take profit zone. And you see our take profit zone, when we draw our resistance point, our take profit zone is touching the trend line. So we head over to close our trade. So $8 to $25, that's not bad, that's not bad. Okay, so we leave this trade early because first of all, it has already reached our 161 zone. Secondly, the trade has touched the trend line. It has touched the trend line, and it is but normal that when your trade usually touch a trend line, it's always advisable to collect partials, or if not all of your profits at once. So okay, however the case, it is still possible for market to go right down, all the way downward. And looking at this setup, it's possible that market can go all the way down, because I see no reason why market should halt and go all the way back up. So but whatever be the case, guys, follow me and we are going to be exploring more strategies together.